It's time for a view from the floor here at the New York Stock Exchange. I am joined by Managing Director at Merrill Lynch, Todd Silaika. It's great to see you, and we're talking a little bit about entrepreneurs today. And we know that it's a risky business for them. There's more risk when it comes to them. How do you incorporate risk into their investment portfolios?
Well, thank you for having me, and it's a great question. Entrepreneurial clients do face a different challenge when it comes to risk. Much of the risk they have is in their business. It's already baked in. So as we think about how do we invest their assets and how do we build the right plan for them, what we need to do is incorporate their business with their personal assets and treat it differently. They don't have the ability to know, let's say January 1st, what their entire income is going to look like for the year, unlike a traditional W-2 employee who may work at a Fortune 500 company. They've got variable income. And with that in mind, the planning is different and the risk is different because so much of their risk appetite is already baked into their business.
You mentioned income. The income can be irregular. Can you talk to me a little bit about the cash flow planning when it comes to entrepreneurs?
Yeah, cash flow planning is critical for entrepreneurs. Oftentimes they have liquidity needs that may be unusual. So we see our entrepreneurial clients often carry a larger cash balance, which is fine. Their needs are also different from the standpoint of stability of cash flow. What will it look like? And it can be a bit of a double-edged sword because your entrepreneurial clients may start the year with not a lot of knowledge about what the year is going to look like. Is it going to be a banter year? Is it going to be a bad year? And how does that tie into their cash flow for not just personal expenses, but for future savings and wealth creation? So we tend to be a little more cautious with our entrepreneurial clients when it comes to illiquid investments. We tend to stick more into the liquid phase in case they have needs. And we want to make sure we're there with them and we know what their business looks like for the year so we can help them plan.
What may be some of the challenges, though, when it comes to retirement planning for them compared to, let's say, a traditional employee?
Yeah, retirement planning is a great topic. I mean, everyone should do it. Right? I think we all have a universal goal of we want to be able to retire someday. When you work at, again, a Fortune 500 company, you have a prefixed menu. You have an item list of what you can do, whether it be a 401k with pre-tax, after-tax, Roth contributions, certain healthcare benefits you get, life insurance, etc. But for an entrepreneur, the slate is clear. Like, what are the options? And that's where a good advisor can help. They could do a SEP, a simple, they can do a deferred compensation plan, a defined benefit plan, a 401k. There's so many different options. So I think what we need to do for our entrepreneurial clients is figure out what are the best options for them. And it is not a one-stop shop or one size fits all. This has to be tailored very specifically to their business needs, their cash flow, what that looks like, how variable or fixed it is, and their long-term goals.
What do you think is the best guidance for the next generation when it comes to financial responsibility?
So next gen is a great topic because when we think about our own personal situation, I always think there's multiple parties involved, right? So as we talked earlier, married, kids, we have our own needs. We have to take care of us first with our own plan, but the most important people in our lives, other than our spouse, hopefully, are our children. And good financial habits start when you're young. The kids need to know how to value a dollar. Like, what does it actually mean? Where does it come from? Is it sweat equity? Is it something that was given to me? Like, what are the purposes of money? And I think one of the areas that, for whatever reason, culturally, we don't express that with our children. We keep everything very tight to the vest. Like, they don't need to know what we have. They're going to find out eventually. Wouldn't you rather have a good family meeting and sit with your kids and teach them good habits and talk about the importance of wealth and where it came from? And furthermore, generationally, things are very different. I think about the greatest generation, the baby boomers, the Gen Xers like me, and we view money differently than, say, Gen Z or millennials. Everything's electronic now. You get a paycheck, it's electronic. You go to Starbucks, you hit your phone on the tap to pay. Everything's electronic. It's almost like money isn't real anymore. Versus when we grew up and you were filling your gas tank and going in and saying, I only have $10, give me what I can get for gas. So I think there can be a disconnect sometimes with the older generation, especially when they're talking to the younger generation about the meaning of money and wealth. And that needs to be played out so that the younger generation has a good respect for what the folks that are maybe giving them annual gifts or assets, what it means to them.
That's a great point. Finally, just can you go into a little bit more detail about balancing generosity versus financial independence for the next generation? Because that's very important, a very important conversation to have.
Yeah. And, think about it as there's three main parties that we look at in our lives. It's God, it's family, and it's our clients and friends. And I think about this much like the airlines. We've all flown, and they do the little protocol in the beginning that no one listens to. Everybody's got their iPad on and they're not paying attention. But there's really good advice in that security briefing, which is if the cabin loses pressure, put your mask on first and then help those around you. When it comes to philanthropic needs and charitable giving, we view it the same way. Put your mask on first. Make sure that, number one, you and, if appropriate, a spouse or significant other have a plan and have a retirement plan that's going to work for you. Next, you have to take care of those around you, your family. Once you've done that and you've built a plan for not just you and your spouse, but also your children, then you can start to look at other needs, whether it be extended family, extended friendships you have, charitable organizations. There are so many great charities out there. And look, Americans are the most generous people in the world. They give away more money than anyone. Start with make sure the patient is healthy. Put your mask on first. Take care of those around you. And then encourage tithing, encourage gifting, because we've been blessed with a lot. And those who have a lot are expected to give a lot.
Todd, thank you so much for the insight and the education.
You're welcome. Appreciate everything.
Of course, and that'll do it for us here at the New York Stock Exchange. I'm Michelle Yu. He's Todd Silaika. We'll see you next time here on Asset TV.